Where has this entrepreneurial bug started from? Because you're saying you're a first generation entrepreneur.
When you go into a family of engineers and you end up being an architect, you're the black sheep of the family.
That was seriously the case?
Yeah,
that all the engineers said, ki yaar, ye architecture
absolutely.
But architecture by itself, it's also an artistic kind of a bent. What led to that need to switch and also come back to India?
So I very quickly figured out that the artistic side was totally dead. It was not going to go anywhere. I mean, I kid around, even though we run a very large design and build business in India, I would not design my own room.
You came back from the United States and your leg of your corporate life there, you didn't have one or two but three ideas that you were working on.
2001 was when I came up with my first startup plan, but the market tanked.
Why finally co-working and why the name Awfis, which is an off spelling of office?
2015, obviously, it was a new phenomenon. Not a lot of companies thought about this space. And I looked at FFICE, it was for $15 million, right? So I didn't have that kind of money. This was available for 1 lakh.
What do you think has been one of the biggest challenges scaling up?
Just about, I think, 4 or 5 months into COVID, and I went back to my team and I said, instead of 50 locations, which we had done over the last 5 years, I said we are going to go 50 more in a single year. And they told me, have you lost your marbles?
Amit, thank you so much for joining us on The Disruptor and great to have you here.
Thank you, Tamanna, for having me here.
Yeah. I want to talk a bit about the space you're in, and then, of course, we'll come to your journey. Co-working spaces, one of the fastest growing, I would say, parts of commercial real estate right now, and makes sense in the kind of shared economy we are, but also one that is very competitive. That's possibly not what it was in 2015 when you started.
So, Tamanna, in 2015, obviously, it was a new phenomenon. Not a lot of companies thought about this space. We were one of the first pioneers into this space. But I think overall, the industry has grown. And I think because the industry has grown, there is more people that have jumped into it. But interestingly, the stat is that the top 5 players control 60% of the market. So even though from the outside, it looks like there are 300 players, but it's a very, very branded space, right? And I think specifically in the sub 100 seat category cohort, we probably are the only branded player there. And which is 40% of India's demand today. So I think from that standpoint, we were fortunate that we entered into a space where we were servicing SMEs, startups, mid-sized corporates before post-COVID, the large enterprises came in. And hence we have a full understanding of, from servicing a customer that requires 1 seat to somebody who requires, let's say, 2,000 seats.
Yeah, but that wasn't always the plan. When you came back from the United States and your leg of your corporate life there, you didn't have one or two, but three ideas that you were working on.
Yeah, so I think from a start, at least, the way I looked at my entrepreneurial journey, I went to Cornell for a master's in real estate. And I think 2001 was when I came up with my first startup plan. And I would have gone basically become an entrepreneur, but the market tanked. 2001 is when 9/11 happened. The whole, environment went by the wayside.
Were you in the US at that point?
I was in the US, and we used to get, 2 plans were selected out of the entrepreneurship program, and we were one of them. And they would get funded by the Big Red Venture Fund. But that was the only year there was no money in that fund. So obviously, I started my corporate journey, and in the corporate journey, we started off doing kind of consulting for what we talk about today, 20 years ago, right? Alternate, these satellite offices, distributed work, work from home. These are terms that we coined in 2001, right? And which took about 20 years to get real, right? So I think we were far ahead of what we were doing then. And then I joined a company called Nelson, which was a small mom and pop shop at that point. We grew it to one of the top 5 giants, design giants in the world. I brought that business back to India. And then in 2010, I bought over that business and the rights for a few other countries, and basically became a first generation entrepreneur at that stage. And since then, I've dabbled myself in 8 ideas. 4 have been very successful, 4 have failed completely.
And what is the top success we know is Awfis. What is the top failure?
So top failure was hydroponics company. We're trying to do farming, vertical farming, and which is a very bad idea.
So tell me, where has this entrepreneurial bug started from? Because you're saying you're a first generation entrepreneur, and clearly it was plan A. It was never plan B. For a lot of people that I speak to on this show, sometimes entrepreneurship is plan B. They've gone through the paces with corporate life, and then you say, okay, let me start something.
No, so at least in my case, I think when you go into a family of engineers and you end up being an architect, you're the black sheep of the family, right? So you're seen as, well, he couldn't get into engineering school and hence he went into architecture school. Obviously, that gives you two things that it teaches you. One is resiliency, right? Because everybody looks down on you like there's no expectations.
That was seriously the case?
Yeah,
that all the engineers said ki yaar, ye architecture
absolutely.
Kya hai?
So in 97, when you graduated as an architect, it was not real estate industry like today, right? That was the lowest salary that you ever got, right? In any educated sort of outcome, right? So at that point in 97, being in the real estate sector was like you couldn't go anywhere, and hence you get into the real estate sector. Right now, it's the hottest sector ever, but it wasn't the case then. So that teaches you resiliency, and then obviously you fall because you've taken some bets because there's nobody to look up to what you're going to do in architecture or in real estate, and that teaches you tenacity. And I think both those reasons are that entrepreneurship was the only outcome.
Yeah, but architecture by itself, it's also an artistic kind of a bent. That's not something that you wanted to pursue, or what led to that need to switch and also come back to India?
So when you go to architecture school, you very soon figure out that there is the left brain thinking and the right brain thinking, right? Some people can balance both, but usually people are either really good at the right brain, which is the artistic part, or you're good at the left brain, which is typically to understand real estate, understand all of the aspects. So I've very quickly figured out that the artistic side was totally dead. It was not going to go anywhere. I mean, I kid around, even though we run a very large design and build business in India, I would not design my own room. So I very quickly figured out that left was the only option. So you make left the strongest, which is the real estate strategy, workplace strategy, all of that. And then we kind of went into that space.
Tell me about the early years, and like you said, there are 8 ventures and all that you looked at. I think 3 kind of took off.
Yeah.
Was it at some point a choice on what to really focus on? Tell me what those early years in that funding journey felt like.
See, since you are raised in the architecture arena, right? So real estate, construction, design, all of them comes very naturally, right? So I think if you look at my journey, went to the US, understood what was, strategy all about in real estate, right? Then I kind of joined a design firm, and we grew that design firm exponentially, right? I mean, we went from $7 million in revenue to almost about $100 million of revenue in a very short span, right? And then when I came to India, I saw the opportunity faster than others. So I think my only, the only thing I take pride on is that we can predict 12 months in advance and bring it out to today. And if you are able to do that, you're just going to stay ahead, right? Because nobody can plan 3, 5, 10 years. So from that standpoint, I saw India opportunity faster than others. Because when I came back, the Lehman crisis happened, right? And
is that what drove you back?
In large parts, yes. Because in 2007, real estate started seeing some fissures. And I saw it before the crisis happened. And hence I figured out that if I was in the US, in fact, the US company went down from 600 people to 200 people in literally a year, right? So I saw it sooner, but when I came to India, I thought the opportunity was just starting, right? I mean, and India took off, right? India dealt with the Lehman crisis well. And that gave me the confidence also to, in 2010, sell everything and buy the rights for the company. So it was a very conscious decision to get the professional experience in. And that's what I tell every entrepreneur. If at 22 you're going to jump out of college and try to be an entrepreneur, there are very few Mark Zuckerbergs in this world, right?
How important do you think is a business degree to the day-to-day running and entrepreneurship? Or do you think it suffices that you've had that kind of corporate experience?
So Tamanna, I think education is the most important thing that you can, gain in life, right? And I say that with unequivocally that, to say that I'm a dropout and I've been successful, you can literally count those entrepreneurs in your fingers, right? Yeah. People who have gone to good colleges, graduated and done well, I think is 99.9% of the norm. Hence, we hold a lot of value for Ivy Leagues. We hold a lot of value for IIMs, right? And I personally, having been a product of an Ivy League institution, I think it's your first ticket to success.
But I'm not talking about education. I mean, you didn't train to be an entrepreneur. You trained to be an architect. So in that sense, do you think that that's a different kind of skill set?
So architecture is a very interesting profession, right? Unlike engineering or being a doctor, it is a jack of all trades, right? You get to learn about various aspects. So you learn about design, right? So you're solving for some aesthetic, but fundamentally, what are you solving for? A client comes to you with some requirement and you need to solve it to that client's satisfaction, right? So at a very fundamental level, you are problem solving. It is a very execution heavy business because what you design on paper, if it's not done well at site, then you lost the plot. So it's as important to get the design right, as important to get the process right, and as important to get it built right, right? So it teaches you so many different dimensions that I think it's one of the best trades where, best education where you can actually do what you want.
This is your answer to all the engineers in the family?
Yeah, absolutely.
That's what you told them. No, so why finally co-working and why the name Awfis, which is an off spelling of office? What was the thought there?
So, Tamanna, I'll answer the first question and then I'll get into co-working. When we were looking for a name, I wanted a short name. I wanted it to be 5 or 6 letters, easy to recall. And when I looked at OFFICE, it was for $15 million, right? So I didn't have that kind of money.
Office, to patent the name?
To take it .com, right?
Yeah, okay.
I was very clear that I wanted a .com, right? So I didn't have $15 million. So this was available for 1 lakh. And the pronunciation, if you open up a thesaurus, right? OFFICE is AWFIS. That's how it's pronounced. And office.com was available. So that's how the journey started. And now we are obviously awesome. We do great things and so on and so forth.
Okay. What do you think has been one of the biggest challenges scaling up? Because, that's another part of the journey. What has been, I think, very positive about Awfis's journey is that the start and then the scale up, it got that big boost. Did that come from COVID, post-COVID, and where have you seen the challenges?
So Tamanna, I think the first 5 years of our journey pre-COVID, we were testing out the model, right? The first center we built in Vasant Kunj was 70 seats. It was a big failure. Everything was wrong. Configuration was wrong. The food menu was wrong. But I think through that journey, we started learning what is the optimal size. We also started learning what really works. What is the right size of a center? What are the type of clients that we are looking at? And when 2020 came, we were just ripe to understand what was the model that would work, right? So the first 6 months were hard because if nobody came back to work, then you did not have a business to start with. But I was very clear that people will come back to some environment. It could be their own space, it could be a coffee shop, it could be, but it cannot be that people will work 24/7 from home. Then a second thing that happened then was that the enterprises started adopting, right? So because of flexibility, because of scalability, speed, OpEx to CapEx, CapEx to OpEx model, all of this changed the enterprises to think about co-working in a meaningful way. And that made the industry size really large, right? COVID, all the industry put together was 25 million square feet, right? Today, if you look at the total industry, it's almost touching 100 million square feet, right? So the space expanded. And I remember this was September of 2020. We just about, I think, 4 or 5 months into COVID, and I went to my team and I said, instead of 50 locations, which we had done over the last 5 years, average of 7-8 locations, I said, we are going to go 50 more in a single year. And they told me, have you lost your marbles? I mean, it's like, there's something really wrong with you, right? I think the COVID is affecting you in some way, right? So to take that bet, and my team said, well, we can't deliver 5 or 6 centers in a year. You were asking us to do that in a month, right? How is it going to happen? Glad to report that journey from 2020 and end of 2020 till now, we are now touching almost 250 locations. We are in 18 cities. We cover 60 plus micro markets. We have close to about 170,000 seats with us today.
So how did it happen? Was it easy to roll up locations because they were hit by COVID? Did that present an opportunity? The initial periods also must have been a little scary because people weren't exiting from their homes. Forget about co-working spaces. Smaller business were packing up.
So in some ways, we had the partnership model, right? It was called managed aggregation, where basically we were doing a profit share, revenue share with our landlord partners. Now, obviously, in times of uncertainty, it becomes a bit easier, right? Because there are not a lot of people looking for expansion space, right? So we signed on a lot of that during that period. And that paid off because the landlords trusted us. In fact, today, Prestige, which is my single largest landlord partner, we do about 1 million square feet in some variation of this model with them, right? So I think that gave us a lot of confidence. So obviously, space sign up was easier. And then, Tamanna, again, as I said earlier, I could predict 12 months in advance what was going to happen. The industry, which was at that point almost at the brink of extinction, I could see that this industry will become mainstream. And that 25, I couldn't have predicted 100 million, but I at least expected the 25 million to become 50 in the next 4 or 5 years from there.
Is that something that you think is your strength? That like you said, you can predict patterns which are going to emerge? Has that kept you in good stead?
So, Tamanna, absolutely. I think, for example, we started a facility management business, Office Care, and it started during COVID. Because of this, 600-700 blue-collar team members that were there, my vendor partners were not willing to pay them. And I was like, for the white collar, I'm making sure that we have not laid off a single person. We are taking care of everybody. What's wrong with our blue-collar team members, right? So we insourced and started that business. But when we are going public, I was very clear that we wanted to exit the business because in the public domain, this was seen, even though it's a great business, I have a very personal views around it. But in the public domain, this is not seen as a great business. It's a low margin, high working capital. It's high compliance business. So we exited that business, right? So I think
this is facility management.
Facility management, right?
So explain that in simple terms for our viewers. You mean like admin services, etc.
So facility management would be like our guard team member that I see, right? I see the housekeeping staff, I see pantry services, I see some reception, some driver staff, a bit of gig workers, etc. So that's all comes under the facility management business. We are doing fairly well, but we sold it, even though we were doing fairly well in the business, because I knew that because the public markets don't appreciate it, they will have an overhang, a very small part of my business, but it'll have an overhang on the overall business, right? So similarly, I think we started design build about 3 years ago, right? Which I used to do originally when I'd come back to India. We kind of, ended that business before we went public. But we started it in office 3 years ago. Today, in less than 3 years, we are over a 500 crore business, right? And I think just like in the co-working space, we were one of the first ones to go public in the world and successfully do it. I think in design build space, it'll be the same thing. We will again, want to have a journey which is unlike any other. And design build.
Will you list it separately?
So Tamanna, I can't make forward-looking statements as you can imagine, but I think the intent at least is we have kind of demerged the business. So it has its own journey by itself. We also wanted to reward a lot of team members that because they were just starting off in the business when we went public, the design build team members did not get ESOPs. So in this entity, we are creating a separate ESOP pool. Because when we went public in office, almost 100 plus people became crorepatис. But out of those people, a lot of people were not part of the design build team. And hence we wanted to create something that we could create an outcome here as well.
Is that important to you to make sure that those who are on that journey with you also make money along the way and grow?
So Tamanna, that's the only way an entrepreneur will be ever successful. If you don't carry your teams along, if you do not have the welfare of your team at their outcome is not important to you, then you might as well not become an entrepreneur, right? Because it is responsibility, and I feel it's my fiduciary responsibility to ensure that people who have given their life, people who have put years of service, can get an outcome in an industry, right, which can give you a large alpha. And I think it is very, very important for today's Indian entrepreneurs to think of the people and how they can meaningfully change people's lives.
Was it very important for you to list?
So Tamanna, we started our journey in 2015, 2017. Sequoia at that point, now Peak 15 came in as a venture capital fund. 2019, Chris Capital came in. Both top-rated venture capital PE funds, and we're lucky enough to have them, right? But the reality is that the investor, when he comes in, he needs an exit, right? At some point, they have a horizon. This is a business for me for life, right? I have to be responsible for it for maybe, at least my generation, right? But as an investor, you have a horizon of 7 to 10 years. So you have to give them an exit. We went public after 9 years of our journey. And I think it was at the right time that we were able to do it. Market timing was right. Because we also said that before the Lok Sabha elections, right, we wanted to go public. June 4th were the results. We went public on May 30th, right? So very, very important. And when I told my shareholders that this is what we were going to do, this is impossible. We just have 9 months, right? So when we got our mind to it, and I think we did the right thing. Right?
But may I ask why? Why that kind of timing was important to you?
So 2-3 reasons. One, we were getting to that 10-year horizon. I felt that the markets between 23 and 24 would climb up in a right fashion. Our industry was getting a lot of legs around it. And the timing was important because if the elections had gone the other way around, then you can get, obviously negativity in the market, right? And IPOs are a macro market condition, right? The macro is very important. Doesn't matter what industry you're in, right? When like the last 18 months have been great, any kind of IPO that has come in has done well, right?
Have you looked at some of the recent ones that said, इससे तो अच्छा मेरा था, इसको जो valuation मिल रहा है?
I mean, again, in my view, Tamanna, and again, when we were doing the IPO, people would talk about valuation. I was really not worried about valuation, and never am, because for me, this is a long-term journey, right? I mean, the investors who come in for the short term might think I need to enter low, exit high. But the reality is, as a founder, I entered at the lowest point, right? Anything is an upside, right? So at the end of the day, I don't think valuations are very important. But I think what is very important is to run the business by first principles, right? I mean, things like governance, integrity, accountability to shareholders, clarity of vision, clarity to your team, clarity to the external world. These are important factors. But ultimately, valuation, you really can't control it.
No, but I mean, in a sense, once you're a listed entity, you're also under that level of scrutiny. For example, every quarter you face all of those questions right now about your debt to EBITDA ratio. What are you doing to service that debt? You're growing, but then your debt servicing costs are high. Is that something now that occupies more of your time rather than what next?
So, Tamanna, at least from my standpoint, because we were invested by VCs and PEs, the level of governance, the level of reporting, the level of consistency, clarity was kind of ingrained in our DNA from the start, right? Because there, at least now I have to report quarterly, there you have to report monthly, right? So we had understood this very well. And a year before we went public, we started behaving like a public company, right? So we started doing quarterly results. We just started doing a quarterly earnings call with our internal investors. So when we went public, it wasn't like a sea change, but I wouldn't have it any other way. Yeah. I wouldn't have had the ability for making 100 crore rupees in the company. I wouldn't have had my shareholders get 5 to 7x returns if I had not gone IPO. And we would not have created the first of a kind co-working, because we changed the industry. We used to trade at 12 times 1 year forward. Today, the industry trades at 20 times 2 years forward, right? So we changed the industry and we changed the narrative in the world, which people globally, there was no company which had gone public, right, in the co-working space. We're the first ones to do it. So a lot of pride in having done that from an Indian company.
What would be a regret, if any, Amit, through this journey so far?
I wouldn't call it a regret. I wish I had kept more shareholding and not diluted. But I do understand that being a first generation entrepreneur, equity was the only capital that I had. And my investors were kind enough to support the journey with their capital. And I'm proud that we've given them great returns as well. But that would be the only thing I probably, looking back, would change.
Would it be a dream to increase your shareholding at some point, if possible?
Well, Tamanna, for the last 15 years of my entrepreneurial journey, I have not exited a single penny out, right? So it's not like I can wish and it'll happen. I don't have it, right? So yeah, obviously, if I had a choice, I would have gone back and brought more shareholding back.
Since you've talked about your prediction skills, let's wrap up this conversation on that note. Your prediction for your journey as an entrepreneur for Awfis and for the industry. Do you see maybe consolidation in the picture? Because you talked about some 300 players. Is there space for all of them?
So on the industry itself, I think the future of the industry is extremely bright, right? We are a sunrise sector. I see it about 5-6-year-old sector because just took off after COVID. I think the industry will grow at the pace it's growing, which is about 15 to 20% CAGR every year, at least for the next 5 years. And that would create a very, very large outcome, right? Of a billion square feet, we are about 100 today. I would venture out to say that we will at least double our size from here in the next 5 years. As far as the Awfis journey goes, I think we sit at a very, very interesting cusp, right? I mean, we today are the market leader when it comes to a network. We are the most asset light when it comes to investment or capital, highest return on capital employed. We are the most diversified in the industry. We have the largest network, and then we have the multiple services, co-working, managed office, design build, furniture, IT services, so on and so forth. And all of these industries are large outcomes, right? I mean, so for us, I believe that the outcome that I predict, I will probably underestimate it even today. I think the outcome is going to be an extremely large outcome for Awfis and as well as for the industry.
Okay, well, there is no entrepreneur who's not feeling positive or will not say that he is positive about his business. But thank you so much, Amit, for coming in today and sharing your story with us on the Disruptor.
Thank you, Tamanna. Appreciate it very much.